One of the more popular dividend stocks right now is the 3M company, stock ticker MMM, currently trading at $104.54 per share. Now, the reason a lot of people are interested in this company is because they have a very nice starting dividend yield, sitting at around 5.74%, and they have a very rich history of increasing their dividend payouts over time. They've increased dividends for 64 consecutive years. So that is an extremely impressive track record. But if we jump over to our summary tab on Seeking Alpha and look at the past year, we can see they're down 20%. Over the past 5 years, down nearly 50%. And over the past 6 months, down about 14%. So what's going on? Well, if you haven't been keeping up with this company, they are in the midst of quite a few different lawsuits. So in this video, we're going to be going over some updates for those lawsuits and jumping into my stock valuation spreadsheet to see if we can calculate the intrinsic value of 3M. So let's go ahead and start digging into it. Now, one of the things you'll notice is in the past month, they've actually jumped up a little bit. They're up around 5.22%. And on June 2nd, they actually jumped up around 9%. They were trading around $94 per share and then got all the way up to $102 per share. Now, why was this? 3M jumped up on the report of a $10 billion settlement over Forever Chemical. So a lot of people thought that this particular lawsuit could have actually been a lot worse. I know $10 billion seems like a lot, but this is a massive company. Keep in mind that the market cap for this company is around 57 to 58 billion at its current share price. But in more recent news, we can see a federal judge recently tossed out the 3M earplug unit's bankruptcy filing. Now, 3M has decided to appeal the dismissal of this bankruptcy case. And so while all this uncertainty is going on, when you dig into a lot of opinion articles on this company, it's pretty split up and divided. Quite a few people think this is a good company at its current value, but there's still quite a few people who feel this is a strong sell. So let's go ahead and jump into our stock valuation spreadsheet and see if we can decide for ourselves by looking at a few different valuation models like always. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. Let's go ahead and come up here and plug in the stock ticker 3M and hit enter, and again, all of this data will load in. Now, the current dividend payout is around $6 per share, which gives them a dividend yield, like we mentioned earlier, at right at 5.74%. Now, the payout ratio is currently showing around 61.8%. So let's go ahead and dig into that dividend data just a little bit more. Now, again, the current dividend payout sitting at around $6, but if we jump into financials, there's something that I want to point out. If we go to our statement of cash flows and look at that free cash flow per share, which you can find near the bottom, you'll see that in December of 2022, 3M's free cash flow per share was sitting at around $6.79. Now, keep in mind their dividend payout is around $6 per share, so that means a large amount of all of their free cash flow is going out to pay dividends, which isn't necessarily a good thing because it doesn't leave a lot of capital left over to continue to grow the business. But if we jump over to our dividends and click on the dividend safety tab, we can see that the payout ratio, when you look at earnings, sitting around 63%. And if we come down a little further, the current cash flow payout ratio sitting at about 60.5%. So it's not necessarily in a red flag range, but it is a little bit higher than I typically like to see it. But you do have to keep in mind, dividend kings do typically have a little bit higher payout ratio. I do still think the dividend is safe, but with all the uncertainty that's going on with the stock right now, that could change depending on the lawsuits. Let's go ahead and dig into this a little more. We can see analysts currently have a target price of $114 per share, institutional ownership around 68%, and a beta of 0.95, so you'll see a little less volatility than that of the market. Jumping into our first valuation, and that is going to be Graham's valuation, you can see the formula Benjamin Graham lays out for us to calculate intrinsic value right here. We take the company's earnings per share, and then we apply our growth rate projection, and this is something I want to talk about for just a second. Applying a growth rate to a company with 3M who has a lot of uncertainty right now is extremely difficult, so I'm trying to be somewhere in the middle with my projections, but keep in mind, obviously, depending on what we get with the lawsuit news, this could change quite a bit. But after we get all of these numbers, we divide by the current yield on AAA corporate bonds, which at the time of this video is sitting at 4.65. That gives us an intrinsic value of right at $100.44. Looking at our next valuation model, the discounted cash flow analysis, the idea is we should be able to value a company based on how much free cash flow it's going to produce in the future. So to project this, we need a growth rate projection for the future free cash flows. So we look at the company's historical free cash flow and look at the year-over-year growth rates. The average growth rate over the last decade or so has been around 2%. Now, moving forward, I do think they have the ability to grow at a slightly higher rate than that, but again, that's obviously very dependent on the lawsuit. So I'm projecting a 4% growth rate to the future free cash flows. We then find the present value of those future free cash flows and add them together, add the company's cash and cash equivalents, subtract out the total debt to get their equity value. We then divide by our shares outstanding and we come to a discounted cash flow price per share of $121.39. Now the next valuation we typically look at is the multiples valuation, but I really feel in 3M's scenario there's not a lot of great comparables, so we're not going to use it in this situation. So that means the last valuation model we will look at is the dividend discount model, and this values a company based on how much they pay out in dividends and how much that dividend is increasing over time. So I plugged in the quarterly dividend payouts over the last few years so we can see our yearly dividend payouts. And now we can see our year-over-year dividend growth rates. It looks like we have around 2%, 0.68, 0.68, and then 0.67. So that dividend growth has definitely slowed quite a bit over the past couple of years. Let's jump back over to Seeking Alpha and dig into that dividend history again. If we come down here, we can see 10 years ago, their dividend payout per share every single quarter was around 0.64. Look at it now, it's sitting at around 1.5. So it has grown a decent bit, but a lot of that came in the earlier years. If we jump over to our dividend growth tab and scroll down, again, you'll see the dividend growth rates have slowed down. 3-year dividend CAGR of just 0.9, 5 of decent at 3.36 for a dividend king, but the 10-year is actually pretty solid, sitting at around 9.33. So again, that dividend growth has definitely slowed quite a bit. Moving forward, I'm projecting a dividend growth rate of around 2.75, discount rate of 8%, and that gives us a dividend discount model price per share of $117.43. So when we jump over to our output tab, we can see our 3 valuations: grams at 100, discounted cash flow 121, and dividend discount model at 117. Average those 3 together, and we come to an intrinsic value of $113.09. The current trading price for the company is sitting at around $104.54. So with a 10% margin of safety, our acceptable buy price for the company sitting at $101.78. With a 20% margin of safety, our acceptable buy price sitting at around $90.47. And the company actually did get pretty close to that trading range. If we jump back over to Seeking Alpha again and look just within the past 6 months, the company has traded at low as around $92 per share. Now, one thing that is clearly true about this company and investors in general is they hate uncertainty. Obviously, I was being fairly conservative with some of these projections because there's so much uncertainty with the current lawsuits. And when we look how 3M's performed over the past 5 years, it's obvious other investors don't like the uncertainty because that share price has been falling for quite some time. So despite the nice starting dividend yield and dividend history, I don't currently plan on adding shares of 3M to my portfolio. There's just too much uncertainty. The company could potentially be trading at a good value, but that's just not a risk I'm willing to take on right now at these current prices. But go ahead and let me know what you think of the lawsuits in the comments down below if you plan on buying or selling 3M. If you'd like to be able to download the spreadsheet, you can head over to my Patreon page at the link in the description. You can also get a 14-day free trial to Seeking Alpha at my link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.